This is our blog video for November 27th, 2012, and today we released a new version which has our new FX trade signals. From the last release, I've probably made at least 50 changes, and there's 15 to 20 new signals, some trend, some counter trend, and this one also does a pretty good job of finding certain W pattern, mini double tops, mini double bottom reversals. As we do most days with our Forex blog, this is our currency meter using the build your own trend. It lets you set the weights and the settings, and it includes real-time comparisons between each currency and every other one. It shows the direction that each one's going. It also shows the intensity of that trend based on the statistical past. And it also now incorporates daily, weekly, monthly trend. So it's one easy to read indicator that pretty much is dummy proof. You basically want to sell the weakest one. You can see the dollar was weak starting the day off, and the yen was weak, and it was weaker. So you'd simply, look for a currency that was extremely strong. Let's say the Australian, and you would want to be looking for buys in the Australian yen. Now, currencies don't go up or down forever, but when you see incredible weakness like this, followed by a little bit of, incredible strength like this, followed by a little bit of weakness, it's safe to assume that strength is going to come back, and most of the time it does. And also, oftentimes, it will come back with a lot of momentum. You can see the same exact opposite pattern happen here with the Swiss. A lot of weakness, a little bit of strength. This one had less strength than the euro did, so it'd be better to look for a Swiss trade. And you can see it came back and had weakness for a couple hours. That's how you use this. You find strength or weakness, and then during the pullback phase, if it's not that much of the opposite direction trend intensity, then you use our FX trade signals that show up on the chart in those particular currencies, or you draw fibs and buy or sell the fib retracement, and use fib targets also for exits. So let's take a look at the Australian yen earlier in the day. So starting last night, you can see a buy signal here and here. I like to draw trend lines on the charts, and anytime I see a breakout, now this one's enough of a pullback that I would take this one. This one's still in a choppy range, so if you see a buy signal like that, wait for it to kind of break above the obvious wedge pattern that you can see here, and you can see that led to about a 30 pip move up. This trade here failed, this one here worked, this one failed, this one worked, this one worked. Later in the day, after 3, the yen was no longer the weakest one. You can see the yen for quite some time actually had some strength. Now, a lot of people don't trade the euro Australian, but from 4, when the yen was no longer really the weakest, you could trade the euro Australian by selling it or buying the Australian Swiss. And I'll change this to a 5-minute chart just so we can take a look at it. Earlier in the day, you can see this just absolutely took off to the downside. And anytime you get into a trade, most of the time fib targets are a pretty good place to get out. This one never made it to the fib target down there. But if you're looking for a relatively safe trade later in the day, draw your fibs on there and look to get short around the 38 to 50% level. You can see it fell from 75 down to 57 on that move right there. Get short, keep moving your stop down above the previous bar's high, and that's a pretty decent way of trading, whether you use that on a range chart or a regular chart. Let's take a look at the Australian Swiss, especially that 3:30 to 4, or I'm sorry, 6 o'clock move. So this one kind of broke out through the highs and took off. And if you are using a range chart and you miss the first breakout, let's go to, let's say, a 4 pips per bar range chart. This range chart's, instead of based on minute charts, based on movement, and get a feel for each currency's average true range, and then use maybe 10% of its daily range as your number of pips per bar. So you can see this one broke out. If you, on a range chart, look to buy a pullback, a lot of times the wicks are reversal patterns. if you have a trend up and you see a pullback and with some wicks, draw your trend lines over there. You can see this wasn't the biggest move. If you had gotten long right here and it came down a little bit against you, typically I put my stop a few pips underneath the low. Some of these currencies I don't trade as much. I trade much smaller lot sizes and use a little wider stop. Another easy way of trading is just simply trade the currencies that you like. The euro dollar, most popular currency in the world. The hourly moving average is in the middle here. We have our containment bands, especially the white and the green one. Probably about 75% chance it's not going to go below the white band, and about a 90% chance it doesn't go and stay below the green band. And so starting the day off, it's above the hourly moving average, so you're focused on buys. And this one uses the point of control, which is the most active traded price for the previous day, and this is the upper and lower value area for the previous day. Typically these act as support, as you can see, support. Once it breaks underneath there, it's a confirmed downtrend. You can see this nice sell here, nice pullback here. The real-time momentum was showing increasing momentum on the way up here. So I typically will, anytime I get a pullback, I always want to draw my fibs on it first of all, from the highest high to the low. And this sell signal is not quite at the 38% retracement. It's much safer to sell at the 38, and I prefer the 50% retracement. So this is probably a pretty low odds trade, given the fact that it went down again. This is the third wave down. It's likely to have a little deeper pullback here. And you can also wait for the digital signal processing based displaced moving average, which I like to put on a chart. 5 periods shifted 2 bars to the right. Wait for that to get broken, then go short. Put your stop above the high, and then as you can see, you can use our intelligent trailing stop that would have caught over 20 pips on there. Another sell signal here. This is a much better trade because notice on the way down there's quite a bit of momentum on this one bar. Most of the bars didn't have that much intensity. But on the way up it had less strength than the average weakness, and you go short, you draw your fibs off this last wave, and it gives you an excellent profit target to shoot for, which you can see it just tagged 1.2917. It's underneath our first band, which is about 65% of the time the market reverses pretty much right around that level. It's based on the 20 days maximum volatility, and it's 1.5, 2, and 3 times that normal volatility. So it's very likely to reverse there. So you would be short this last time here at 41, out at 17 for a nice 24 pip win. And again, the deeper, the farther down the currency goes, the more likely it's going to need to pull back at least to the 38 to 50% level. This one didn't quite hit the 38%. The only good news about this is on the way up it didn't have that much strength. So if you took a shot at selling this when it went up underneath the low, put your stop above the high, notice it got tagged, it came back up. Usually if it doesn't go your way at least a bar or two right away, it's going to be a loss. So you can get out of this trade with 5-6 pip loss, go short again here, get your loss back. And anytime you're short and it's starting to come down and there's not that much weakness, just get out of that trade. I'm going to always trade a little bit more lots at the 50% retracement than I am at the 38, and trades that are underneath the 38 are even lower probability because there's less chances of it making a big move. A lot of times markets come down, they double bottom at the lows, and so your likely profit target here is 29.16. If you short this a pip underneath the low, you have a 12 pip profit target there. It's not really worth betting a lot of number of lots or a big percentage of your account when your likely profit is only 12 pips. That's why this, after the market trended down for so many hours, when it pulled back to all this resistance area right here, it's a very high probability place to look for sells. Notice our signals finds this W pattern here. It goes up, down, up. Pattern type trades are wonderful, especially little mini double tops like that. I call them a W pattern, and in this case it's more like an M because it's a sell. On the bottom it looks like a W, but it's a very high probability trade at major resistance and at the 50% retracement. You can see you would have shorted there at 29.65 and rode that down at least to 40 and made 25 pips on that trade.